Good afternoon, traders and investors. Will back here with another one, coming to with a Wednesday market recap. Hope all of you had a very good day of trading, and happy Thanksgiving to each and every one of you out there. Spend a lot of times with your friends, your family, your loved one over the course of the next few days, and enjoy the holiday, guys. Once again, tomorrow's market action will be closed. We get a little bit of trading on the Friday session from 9:30 in the morning Eastern to 1 p.m. And then after, the markets will be closed as well. So not too much trading to be left in the week. So make sure you spend some time with your friends and family. Now, in today's price action, in today's market action, guys, what did we get? Well, the index is having a little bit of pullback and consolidation. However, we did get very good data over the course of the morning. We got personal income, personal spending. We also got GDP numbers. We got inflation numbers as well. We'll be taking a look at a few of those in just a few short moments. But why were the indexes down? Well, it all comes down to one sector that was in the title of yesterday's video, and that has been uncooperative with the markets over the last 3 months. This sector had a phenomenal 2023 and a phenomenal start to 2024, but since July, the bulls in that sector are nowhere to be seen. And of course, I'm talking about semiconductors, so we will talk about what exactly happened today in the video as well. So, in terms of what we're going to cover in today's video, just a general rundown. First, we will dive into the technical analysis rundown of our major stock market indexes, see how they are shaped up leading into the holiday sessions, and thereafter cover our big tech names and see how they are shaping up as well, whether or not we can find some good discounts there. Thereafter, we're going to be taking a look at a few of the hot or not stocks today, right? Some of the ones that were down significantly and also some of the ones that were up significantly, and just go over as many tickers as possible in a 5 to 10 minute span. A few people want me to cover more than just the usual stocks that I do cover, and I do cover them, just not in every single video. So today we'll spend a little bit more time on that since we do not have to cover earnings. No portfolio update for today. I will leave that for the Friday session. A few little rearrangements in the portfolio today, and you guys will have to wait till Friday to see exactly what I did in the portfolio, but nothing major, just a few very interesting swing trade ideas. So moving into it, guys, in terms of today's price action, SPY down about 0.3%. The QQQs, the pain point of the day, they were down about 1.5 at the peak of the bottom of the day. And as you can see, when I bring up the heat map, guys, it is once again all concentrated towards semiconductors. They really haven't been having a good last 3 months, and today was no exception. This is largely due to the earnings from Dell and HP, and we'll be going over that when I cover the SMH index a bit later in the video in about 3-5 minutes worth of time. Pain point on the day, big tech also rotating away. We know we've had some decent rotation into big tech in the last few days, but the one thing that I want to see, guys, is when you get rotation out of the technology sector, I want to see rotation into the rest of the market, and today was definitely a benefit for the rest of the market. Financials doing really well. Berkshire was up 2% at one point on the day before pulling back. Healthcare doing pretty good, and the bottom half of the market doing fairly well too. So that being said, where do we stand on the one-day relative performance, guys? Well, you can see today was a little bit mixed, but more sectors were up than down. To the downside, led by technology, consumer cyclical, and industrials. Where do we stand on the 1 week? Well, a lot better than we stood about 2 weeks ago. Everything pretty much in the green except for technology, flat. Communication services, which largely is Google and Meta, that too was flat, and energy to the downside. So overall, the bulls still in control of these markets, but you have to keep an eye on the rotation, guys. Just always follow the money. You'll hear me talk about rotation a lot on the channel. So before we get into the technicals, guys, let's go over a few of the data points, and we're not going to spend too much time on this at all. Just do a very brief overview. So we got a massive amount of data over the course of the day today, and most of all of it was very good. Core PCE. Jerome Powell gave us this, in all fairness, about 2 weeks ago when he was stating the interest rate decision. He spoke about PCE for the month of November, or October rather. We didn't have it yet. It came out today. So he kind of jumped the gun on that. So that's why we weren't expecting anything else. He said the numbers were in line with expectations. And as you can see, he wasn't wrong. The numbers were literally in line with expectations year over year for core and month over month for the headline number. So decent results on PCE. They kind of line up with the CPI and PPI that we got just a few short weeks ago, whereby, yes, it's a slight increase from the month prior, but was in line with expectations. So we know that inflation will ebb and flow. It'll be a bumpy path back to 2%, to quote Jerome Powell himself. But overall, inflation is still going in the right direction. Thereafter, guys, we've got the GDP numbers. Once again, this is a revised GDP number. We actually got the actual number last month. They revise it every single month of the quarter. Once again, coming in at 2.8. So no revisions up, no revisions down. The economy apparently still strong If, of course, guys, you believe the data, because I know a few of you say that the data is fake, but there it is. That's the number. Just here to report the numbers, guys, right? And in terms of personal income month over month, take a look at this, 0.6% compared to the 0.3 expectation. So personal income, we know because we've went over the CPI numbers together for the last 6 months. The wage increases have been outpacing the rate of inflation. So consumers are slowly but surely recapturing purchasing power. I know it doesn't feel like it, but keep in mind, guys, these numbers move very, very, very slow. The one thing you do not want to see is the wage increase rate being lower than the rate of inflation, because you would be losing even more purchasing power. So this still in the right direction. And personal spending, with a little bit of a surprise here, 0.4 versus the 0.3 estimate. Better than the estimate, but a little bit weaker than last month. So personal spending still remains somewhat subdued. Consumers still being very picky with what they choose to spend their money on. But if we take the credit card issuers, the banks, the retail sales numbers that came out, these quarterly earnings over the last month and a half, consumers are still spending, and those companies said that as well. But we know that consumers are still being a little bit picky about what they choose to spend their money on. So overall, we got a bunch of data today, and none of it was truly bad. None of it showed any major red flags. Is it a little bit weaker than anticipated? Or in relation to last year, perhaps? Yes, guys, but that's the byproduct of keeping interest rates at or around 5% or higher for the last almost 2 years worth of time. It does have an impact on the economy. Our job is to measure whether or not that impact is getting out of hand or whether or not it's still well within reason. And as of right now, still well within reason. We are not seeing data fall off an absolute cliff. That would be a recession indicator. For now, we still don't have that. But as I've told you many times on the channel, guys, I will keep my eyes peeled. I am unbiased here. I am cautiously optimistic in my trades, but I am always, always, always cognizant of the bear thesis, guys, right? Always keeping the bear thesis in mind. There's a lot of possible points that can derail the market, and I'm constantly on the look for which ones are displaying more red flags than others and which ones are getting worse. And I will keep you guys updated in the event that we get some data that makes me pivot from cautiously optimistic to somewhat pessimistic, right? But as of now, in terms of how bullish I am on the markets, I would say about 75%, right? Because I do acknowledge that there is a possible recession case. As of right now, it's not manifesting, but I'm not saying that it possibly won't. In my opinion, if that does come, it will most likely come in the months of February and March. That is when we probably get some. If there is going to be any recessionary data, in my opinion, that's probably when we're going to get it. But in terms of the December month, guys, should be smooth sailing for the market. Traditionally, in terms of seasonality, it is a fairly good period, as we know. But then again, you got to take this with a little bit of a grain of salt, right? September and October are notoriously bad for the markets. They are the worst months rather, in a year for the markets. And September and October for the markets were green. So even though December is supposed to be green, can it end up red? Yes, there's always a chance because these are always probabilities. They are not 100% guarantees. We'll keep an eye on it though, but the bias definitely is to the upside for the month of December. So moving into our technical aspect of the video, guys, technical analysis portion, we'll go through the indexes a little bit quickly because you'll see not much has changed, guys. Very low volume day leading into the holidays. This is to be expected. SPY control is the daily uptrend right now. So the bulls in full control, still looking for the continued expansion of the daily uptrend. Overhead resistance should be this trend line at about 610, 611. Fairly obvious level to be basing our trades off of. And of course, right now we are having a little bit of difficulty passing the new all-time high. But if we do pass it, I'm just here to say probably 610 is the next area that we could find a little bit of resistance from the bears. Now, in terms of to the downside, in the event we roll over from these levels, there's still a lot of space for the bulls, anything above 583, just looking for a daily higher low for possible further trend continuation into this trend line up here. And over the course of the next week or two, if we unravel into the infamous daily downtrend, is the world over? Is the recession starting? Well, not until I see losses of the major timeframes by the bulls. And so far, they control all of the major timeframes right here. Anything pretty much above at this point in time, well, even they haven't set the highs yet. Anything at this point above 568, going to be looking for a weekly higher low for possible further trend continuation. So keep an eye on this area of support below us, which is going to be 585 down to about 580. Moving on to the Qs right now. Qs not having a good day for many different reasons, but actually for one reason in specific. Semiconductors were the pain point of the day trade, and also software as a service companies were getting hit pretty hard there as well. all because of Autodesk. Autodesk actually reported some very, very good numbers today, guys. I didn't cover their earnings last night, but they reported good earnings. There's concerns on this stock about a transition in management and slightly missing on the guidance for gross margins. Now, gross margin guidance usually is not the biggest thing in the world, but keep in mind, this company does have very decent margins to begin with, talking about between 16 and 17%. They missed it, guys, by a whole 3 basis points. Not that much to begin with as a whole, or 0.3% rather, 30 basis points. Not that big of a deal in my opinion, guys. The forecast for this company is still very good in terms of EPS expansion and revenue expansion, but this is just another case of a company reporting very good quarterly earnings, but the guidance just wasn't enough to constantly raise the bar. And when you have a company that since the last quarter here was up roughly 25%, once again, it's the NVIDIA effect. They have to justify why they're outperforming the market in the last quarter by such a wide margin. And if they cannot justify that, it is a great excuse for Wall Street to just sell down the stock. So normal price action that cascaded into other names such as Oracle, Adobe, Palo Alto Networks, and CrowdStrike. The cybersecurity names were down because of CrowdStrike's earnings. We covered them yesterday on the channel. So a lot of the cybersecurity plays were down as a result. So not only do you have software as a service names that were down, you also had cybersecurity names that were down as well. Add to the mix a host of semiconductor names that were down bigly today. NVIDIA was down almost 3.5% at one point today before retracing a lot. And that's what you get, right? Just a day of technology sell-off as a whole. I wouldn't say, this is just normal price action as a whole, guys. I wouldn't say that we're developing some form of red flag trend here where people are fleeing technology. We've gone over the fundamentals of all these companies over this past quarterly earnings, and all of them were very, very good, right? So we'll just keep that in mind. Now, moving on to the QQQs in terms of the analysis, right? Now, we have still the daily uptrend in motion, lower high, and now we're coming into a scenario that I was also anticipating, right? Big pullback by the bears. The bulls still can't save this. Why? Setting up for the higher low like today and going for the higher high and pretty much building a new daily uptrend. The only red flag comes in if we flush this low right here, 494.46. Flush that, you get the daily downtrend flush, and you get a little bit of a weekly rollover. At that point, you'll just be looking for a weekly higher low, anything pretty much above 485. Still looking for that weekly higher low for possible further trend continuation. I would not be surprised if maybe we just consolidate sideways and hold this range of support, which is 500 down to about 495. Moving into XLF right now. XLF, very good day, although they were higher, pulling back a little bit at the end. Keep in mind, daily RSI is slightly overbought. When you know this move is topped out is when we lose the hourly time frame. If you lose the hourly time frame, higher highs, lower high, and then lower low, you get set up the pattern and you lose the 12 EMA in a significant fashion. You know that this daily move is most likely finished and we're going into daily consolidation. Good thing for the bulls though, tons of space, anything above 49.27, looking for the higher low for possible further trend continuation. And even if you roll this over completely into a daily downtrend, guys, who's in control here of the weekly? Well, it's obviously the bulls. Bulls looking very fresh and very nice right now. Have a lot of space, anything in pretty much above 46, let's call it. Just gonna be looking for that weekly higher low for further trend continuation. If financials come down for a few weeks, we need to see 2 other sectors make up for it. 2 of the ones that have been slightly lagging behind, namely the Qs and also namely healthcare. So financials is due for a slight pullback because they've been carrying the SPY. So now if they choose to take a little bit of a breather over the next few weeks, I need to see some momentum, some rotation come back into technology and especially into the next one, which is healthcare. Healthcare having a good day today. They were up almost 1% at the peak of the day before retracing a little bit. And now the bulls are trying to attack this resistance area as much as possible. 148 down to about 145. We know this is important, guys, because we're in the context of this massive weekly downtrend. And how do you reverse a weekly downtrend? Well, step number 1 is getting a sizable bounce. As of right now, the bounce size is very good. The bounce size is about over the 618% range, which gives the bulls a very good opportunity to set up for the higher low for a possible daily trend change. Once you get the daily trend change, you know that the weekly lows are set. You can argue that they're set right now, but until they set this daily trend change higher, guys, we cannot have a confirmed weekly bottom going for a possible confirmed weekly trend change with the daily trend change as well. So a lot of work left to be done by the bulls, but still looking good. The size of the bounce is very nice, and we reacted quite nicely as well from the 140 down to 134, which is the prior all-time high range of resistance, which is now acting as support. So nice defense being played by the bulls right now. A few of the names that I've been looking at, guys. NVO is top of my list right now for a company that's just been beaten down and beaten down and beaten down, kind of like Semiconductors ever since the peaks here in the month of June. Now we have approached weekly oversold. So similar to the rest of the healthcare sector, we will be watching for the weekly trend recapture. The bulls with a lot of work to do, but looking decent for a possible bid entry right now. Moving into Semiconductors now. So 1.31% to the downside, guys. What happened? Why is the entire semiconductor list flushing today as if it wasn't enough, right? As if all this sideways price action was not enough. You know, names coming down left, right, and center, names still not recovering, names like ASML down again, down perpetually, even though it's an absolute monopoly. Names like LRCX, very nice powerhouse players there. LRCX down. Micron also not being able to break out. Micron is also down. What else is down, guys? Pretty much everything, right? Looking at Qualcomm, significantly down since the peaks in June as well. Looking at a stock like AMD, which we'll tackle in a minute, also simply down, right? The only outperformance that we do have in these markets right now, guys, NVIDIA, TSM, and AVGO, and you guessed it, all three of those companies were down. Well, we've covered this a few times on the channel before, guys, but I want to remind you that although semiconductors have made an absolute killing attacking the data center business, I'll remind you that the data center business is relatively new. And yes, it has contributed to bringing these companies record profits. But do not forget that the semiconductor industry as a whole is a very cyclical industry. It ebbs and flows with the movements of the economy and ebbs and flows with the movements in inventory as well. So I will remind you exactly what happened here. And we can take Micron as a first example. I'll spend about 2-3 minutes on this just to explain. So none of this should be a surprise to anybody, mind you, because for the last 2 quarters, all of these companies have been guiding that the end of 2024 is going to be a little bit weak, a little bit soft, as other manufacturers get through the last of their inventory before they start ordering new semiconductor stuff, equipment, chips as a whole, early 2025. So when you pull up on TradingView, when you pull up all of these or most of these companies, right? When you pull up their forecasts and go on the EPS, you will all see the same thing. Huge rally in 2021, 2022, and then transition years, 2023, 2024. All of the products were bought and sold, guys. Semiconductors is not only data centers, it is personal computing electronics, right? And what happened today? Well, what happened today is you got 2 of the biggest sellers of PCs, right, that came down after earnings, issuing slightly weaker guidance than expected. The guidance was good, but once again, weaker than expected. And you guys know Wall Street has been reacting to guidance. If you only come in line or slightly worse, they will flush your stock, guys, 6, 7, 10, 15%. That's how it's been for the last 2 quarters. So I'm not too sure why anybody is surprised right now. HP, slightly weak guidance. Dell, same thing, slightly weak guidance. So PCs and electronics, guys, is a big portion of semiconductors. If these guys are talking about slightly weak guidance, well, it goes up the pipeline, right? All of the components that go into these PCs, namely semiconductor plays, well, that's why they all took a hit, right? So moving in, you'll notice that the revenue profiles and the EPS profiles of most of all these semiconductor names, they look exactly the same. Boom cycle, 2021, 2022, huge demand. Then people got hit with inflation. They stopped buying electronics. They stopped buying PCs. They stopped buying phones. They stopped buying cars as well. Cars a big component for semiconductors, especially with all the technology that goes into them nowadays. So there's your boom cycle, here's your transitional phase, and there is your next boom cycle, 2025. They have been saying this for the last 6 to 9 months, so I'm really not sure why anybody's surprised. That is Micron. Now let's take a look at onsemi, who does a lot of things for phones, PC and electronics, and cars as well. If we pull up the chart for onsemi right here, I apologize, my computer is being a little bit picky right now. If you pull up onsemi, you'll see the exact same thing. Boom phase, transition years, and then back to boom phase, right? I can pull up so many of these different charts, guys. Take a look at this one as well, right? LRCX. You can do this yourself, right? I'll just go through a few. Look, LRCX, boom cycle, transition cycle, and then ramp. Boom cycle, transition cycle, and then ramp. And there, the last one, ASML, you could go through a ton of these guys and you'll see that for 9 out of 10 of them, it is all the same thing, right? ASML, same thing. Boom cycle, transition year 2024, as they have been guiding for in the last 6 months, and then further expansion into 2025. So essentially what I'm saying here is, if you are still bullish on semiconductors, if you're still bullish on the consumer, right, being able to purchase things in 2025, on financing with rates coming down, potentially talking about autos, talking about PCs, tablets, phones, everything in between, right? So if you think that that's going to happen, now is possibly a very good time while all these semiconductors are going through the transition period that they guided for. This is no surprise. We've been talking about this on the channel for 6 months at this point, right? Now is possibly the time if you want to benefit from the boom cycle 2025. We have the guidance. All of them have guided really, really well. Now is possibly the time to throw in some bids on your favorite companies that have just been beaten down and left down for the past 1, 2, 3 months since the peaks reached at the end of July. So that's the focus of the semiconductor trade right now. Hopefully that makes sense. Daily downtrend right now coming into support, 237 down to 226. Same thing, guys. We are trapped between two 10-point ranges right now. Below support and overhead resistance. We are in a weekly downtrend technically, but I do not think the bears are going to run away with this one to the downside. The fundamentals for all these companies are just way too good for that. So we're just seeing some sector weakness right now, perfectly normal, but until we break this support range to the downside, I'm not too nervous for this industry as a whole, and I will be bidding my favorite companies, but the bulls kind of need to get their butts in gear. You can see how they reacted from this zone initially today. What you need to see is finally the daily trend change, need to test this area of resistance and finally get through it. If you want the bulls to recapture the longer term time frames, such as the weekly, add the monthly as well. For now on the monthly, guys, this is just a big bull flag, right? It looks pretty good. I know it doesn't look too good when you look at it on the daily, but on the longer term time frames here, I really don't see many red flags. Moving into IWM. IWM also a little struggle here today. We know that they set the daily uptrend in motion right now, looking for the daily higher low for possible further trend continuation. So a little bit of weakness today with the rest of the market. They were actually up 1% on the morning before kind of giving it all back. And then we had low volume the entire day because of the holiday, but the bulls are looking quite good, looking for a higher low, anything at this point above 226, looking for the higher low for possible further trend continuation. So watch a retest of maybe the 235 12 EMA could provide some short-term support for the bulls if they need it before pushing a little bit higher. They can always push higher right away, and if they do, the next stop is probably going to be 250. Moving on to the Dow Jones, give me a very brief moment. So moving into the Dow Jones right now, down about 0.31%. Not that big of a deal for the Dow, guys. The Dow looking very strong. 4, 5, 6 days of big rally in a row, possibly due for a little bit of a pullback, right? If we do get some pullback follow through, anything above 42,971, let's just call it 43K. Anything above 43K, looking for a daily higher low for possible further trend continuation. The Dow is looking pretty good today, not yet losing the hourly trend change and losing the 12 EMA as a whole. But in the event they do that, just understand what we're going for here. The long-term bulls are in absolute full control. So even if you lose the daily uptrend and go into daily consolidation in the early portion of December, who's in control here? Well, it's your weekly bulls. So much space on this chart, guys. At this point, anything pretty much above 42,500-ish. This little wick that you can barely see, I don't know why I put my screen all the way there. So this little wick that you can barely see right there, let me move it over. Now you can see it, right? So this is the weekly higher low, possibly looking for a little bit of weekly trend continuation. Not looking too bad on this index as a whole, so we'll keep our eyes peeled on that. The rest of the other sectors, we'll cover it on Friday, but as you can see, the sectors were fairly mixed today, right? Energy to the downside, but other names were doing fairly well. Now, moving into another sector that moved a lot today, we'll cover the yields and whatnot on the Friday session. We covered them in the last 2 days. The sector that has performed very well today, we have to talk about Bitcoin, right? Bitcoin with a 4.5% day to the upside. We were monitoring this area yesterday. Why? Because we were looking for the daily higher low for possible further trend continuation, and the bulls bounced exactly at the support range. 91.6 down to about 89.8 was that support range. looking good. So we will see, can the bulls continue this daily uptrend? And continuation beyond here would literally be the candles cracking $100,000. So can we do it in the next few days of trading? We will definitely see. To the flip side though, in the event we just set a lower high into lower low and flush, I will remind you who's in control of the longer time frames right here. It is definitely the bulls, right? Weekly uptrend is very gorgeous right now. We'd just be looking for a weekly higher low for further trend continuation. We will attack that scenario once we come to it. But so far, until the bulls lose the daily uptrend, I will not be looking for weekly pullback levels. We will take this one time frame at a time. And I did add a little trade today using MSTR because MSTR was down a lot in the most recent couple days of trading. And there was an opportunity that I took. I wrote some short puts under the market for some very, very, very juicy premium. That is how I'm playing MSTR for now, but I am also considering a few longs, maybe not using MSTR as a proxy. You guys know I do like to play BITX. Moving on to Ethereum right now, and this will be good for the rest of the altcoins, right? Ethereum really outperforming, guys, and it's looking quite good. We were keeping an eye on this, right? Keeping an eye that Ethereum was trying to hold the levels right here, trying to constantly search for the daily higher low for further trend continuation, and we found it, and we got the trend continuation looking pretty good. And now we're coming up into the next area of possible resistance, which adequately is going to be these guys all the way up here, your all-time high areas of resistance, guys. 37 to about 3,900 and culminating, of course, in the 4,100 level, which is your previous all-time highs. Not looking too bad there at all. Or sorry, the all-time highs are at, my bad, guys. The all-time highs all the way up here at 48. So these are the 52-week highs, rather, let's say the year-to-date highs. So it's going to be a challenge whether or not we can get over and above those levels, but so far looking very good on the daily for some continuation. Any move lower, looking for a daily higher low, anything above 32.6, it's just going to be looking for a higher low for a possible second attempt at this level right here. That is if we don't just blast through it right away. And on the weekly, who's in control of this weekly time frame, guys, should be quite obvious, right? The weekly bulls are in absolute full control. Even if we get rejected right here, we would just be looking for a weekly higher low for a second attempt at that level. So Ethereum and the altcoins looking like they want to come alive. Just keep an eye, guys, on the Bitcoin dominance chart. Bitcoin dominance will only go down one of two ways. Bitcoin rallies, but everything else rallies a lot more, exactly the day that you're getting today. Bitcoin dominance is down, even though BTC is up, the rest is just up a lot more. And they have broken a key level today, guys, that we have not broken. Close the weekly below in a very long time, right? Keep an eye on this weekly transition. If we get the weekly downtrend and really start pushing the levels to the downside, you will know that the altcoin season, in other words, is pretty much here. And even though Bitcoin will be maybe going up or flat, the rest of everything might just be moving up a little bit more aggressively. I have a bunch of positioning in altcoins myself as well, looking for that altcoin rally. I would say that still we're relatively early in the grand scheme of things, but you're not really getting the bottom levels. I position most of my trades closer to the bottom in anticipation of this rally. Granted, I did not go as heavy as I might have wanted to, but I do still have exposure, and I do still think it is relatively early in the rotation between Bitcoin and the rest of the altcoin market. So keep your eyes peeled on that rotation. Moving into Apple right now, so let's cover our big tech name, shall we? So moving into Apple down about 0.06%. Not the best, not the worst day for Apple, just kind of holding in line, right? So daily uptrend is clear as day. Resistance stays put at 235. And if we get a move down from here, looking for a daily higher low for further trend continuation, right? And now we've broken through this resistance range, 230 down to 225. So you'd just be looking for the breakout, retest, and possibly give it another shot at the all-time highs in the event they cannot break it right now. The weekly is also looking quite decent on Apple too. Weekly, if they do crack a weekly candle above this range, weekly uptrend is now resume for the bulls. And there is a trade opportunity. If you get the breakout, retest of the all-time highs and run, that would be a nice trade entry opportunity for me. I usually don't play the actual breakouts. I usually wait for the confirmation trade. I wait for the breakout, the retest and run usually gives me a higher probability, because the last thing that you want is going for the breakout attempt. You just get rejected and you end up back here, which is actually the trade opportunity. It's either retest of this range and go for it, or break above and retest. But I do want a retest, guys. I'm a big fan of the retest trade. Moving on to AMD right now. AMD down about 1%. They were down over 3% early on in the day. And unfortunately for AMD, it's not the company's fault, guys. We've been over this so many times, right? The valuation is very good. Take a look at the analyst price targets, right? Analyst price targets are all above the current share price. Take a look at their data center ramp of EPS expansion 2025 onwards. huge expansion, their NVIDIA phase, essentially. Take a look at this revenue expansion, their NVIDIA phase, essentially. It's not the company's fault, guys. It's the overall semiconductor industry right now. It is just not in favor with Wall Street, but that, in my opinion, will change in the next coming months. That being said, AMD, unfortunately, guys, losing any chance at a daily uptrend, flushing the lows. So now, unfortunately, the bears are in short-term control again. The bulls are going to need to start everything from scratch with an engulfing move, resetting the daily uptrend, and only then can we look for the weekly trend recapture. As of right now, they are barely holding the weekly higher lows, guys. So all of the momentum is lost. I would keep a focus on the daily trend first. So for me to be adding any call options to AMD, yes, of course, it's fun trying to constantly pick the bottom, but I want the daily uptrend confirmation because when I get it, I can enter here and set a defined stop loss down below there. If you're trying to constantly pick the bottoms, right? Well, then your stop loss, unfortunately, has to go below this guy down there or below this guy down there. So I would rather wait for the confirmation trade to be able to enter more calls. That being said, we're in support 141 down to about 126. Another way that I'm contemplating playing this is just writing short put options below the market. 130 down to 120 is a very cheap area for AMD in terms of that. But we know, even though the company is cheap, does not mean that it has to go up right away. And when you have a whole sector that is just not getting much love right now, unfortunately, AMD is getting dragged down as well. Moving into Amazon right now, down about 1% on the day, but Amazon is doing fine, right? They had a 3% up day yesterday. Today is not really going to change that. Daily downtrend was in motion. The bulls engulfed completely, and now we just might be looking for a daily higher low for a new daily uptrend. Why would we have that bias, guys? Well, quite simply because the weekly bulls are in control right now. It is a gorgeous weekly uptrend. Weekly higher lows are set, looking for a continuation of the weekly uptrend right now. So looking pretty good. And even if Amazon were to come back down here, let's say for XYZ reason, you can look to the higher time frames, guys. Who's in control right here? Well, the monthly bulls are well in control. So even if we do retest the prior all-time highs at around the 190 area, that would be a buying opportunity for me, in my opinion. And I will be looking to play some short puts as well. For now, just kind of riding the call options on Amazon that I do have. But if they provide another entry for opportunity, I will grab some more positions. Moving on to Google. Google up about 0.12%. Wow, what a change. Everything else was down, but Google is actually up. Usually it's the opposite in the last few months, right? Everything is up, but Google is down. Google putting in a decent little day today, but the bulls still have a lot of work to do. Daily downtrend is in motion, and the upswing is coming into resistance, 176 down to about 170. So the daily bounce as of right now is okay, but it's not the best. Only a 38.2 bounce. So in the event we reject from here, the bulls have a chance of getting the daily uptrend back, but it's not a very big chance, right? You need to see them come up a little bit more, create more space, then they have a good probability of being able to do it. But if we roll over from here, a retest of the lows is somewhat likely. And in the event we retest the lows, you will find me writing some short puts options down here into areas of support, into the 200 daily moving average as well, and possibly even adding another leap call option to my portfolio. So Google is a fantastic company. The valuation is very cheap, but everybody knows why they've been down and not catching up with the rest of big tech. It has to do with the Department of Justice headlines. So if you can get over those headlines, and if you also feel that the consequences towards Google are not going to involve breaking up the company and keeping them out of the search business for 5 years, well, if you think that these headlines are overblown, then it can be a very decent buying opportunity. I'm not trying to convince you how much weight these headlines should have on you. That is a personal decision that you need to make by weighing the pros and the cons of being a Google investor. For myself, I do believe that the risk to reward profile now is more favorable. Notice I say risk to reward profile because it's not only guaranteed reward, there is some risk to this trade. But I do believe that the risk reward profile is a lot more attractive, of course, than it was back here. And the valuation is very good. So for me, Google is a buy down here. But of course, none of this is financial advice. I really urge you guys to do your own research and come to your own conclusions as to whether or not it's a risky bet for you or not. Moving into Meta right now, Meta down about 0.76% today, but you really can't tell, right? Because they do have the context of a nice new daily uptrend right now, still above the moving averages, which is not too bad. But who controls everything right now? The weekly bears, right? We know it's still a weekly downtrend, and we know we're in for a little bit of consolidation. In the event that consolidation continues, into the lower level, this is going to be a great breakout retest trade on the monthly here, guys. Beautiful monthly uptrend, right? Going to be a monthly retest and then possibly run. So if we get a little wick down here in the early portion of the month of December, basically early next week, I will be a buyer of Meta down there 540 to about 530. Beautiful retest, possible trade. Technicals and also the fundamentals, guys, of this company are looking fairly good. So as of right now, it is just a sideways kind of consolidation phase for Meta. But if they give me a little bit more and give me the entry that I've been patiently waiting for, I will definitely be taking it. Moving on to Microsoft right now. So Microsoft was not doing too bad for a majority of the day. And then you guys know what happened, right? You guys, do I even need to say anything? What could possibly have happened to Microsoft at the end of the day? What has been happening to all of the big tech companies over the past 2, 3, 4, 5 weeks, and arguably for the last 7, 8 years that I've been investing in these companies? Every single time, guys, another investigation. This time again, once again, from the FTC. So here you go, guys. FTC opens antitrust investigation into Microsoft, and another one, right? Cue up the DJ Khaled meme, and another one. This is part of being an investor of monopolistic companies, guys. It is a risk, a constant headline risk that you will have to face. I cannot begin to explain how many times I've been through these over the last 6, 7, 8 years, investing in companies such as Amazon, Google, Meta, Microsoft, Apple, NVIDIA. You know what? Even NVIDIA, the Department of Justice is even going after NVIDIA, guys. It happens every time. It's just a byproduct of being an investor in monopolistic companies. These things simply happen, right? That is the risk of it. If you ask me, is it that big of a deal? Probably not, as every single one of these investigations into Microsoft over the last 10 years have been. Usually at worst results in a fine. Microsoft has to abide by new regulations, and all these companies do follow all of the regulations that are put forward for them. So once again, the FTC cracking down on big tech, very logical. That's their job. So you can't really fault them with it, right? I'm just here to report the news. I'm not here to comment on the ethics of big tech versus small corporations and the intricacies of that. I'm just reporting the news and why the stock dropped and why, as investors in these companies, we have to come to anticipate these types of headlines, right? So into Microsoft right now, down about 1.17%. The bulls have created a lot of space off the lows for 1046. If we get the daily pullback, we know that this resistance area has been challenging, 435 down to 423. It has been challenging all year and now is no different. So now we're once again going to be waiting for the daily higher low and possibly go for the daily trend change into resistance, possibly look to continue on our way to filling the earnings gap at about 432. The weekly as well paints no clear picture at all, just a bunch of sideways consolidation since the month of September. So that being said, if we do come down back here, I'll be using my same strategy, riding short puts below the market into support and possibly even adding to my call debit spread position. Or another trade could possibly be waiting for the breakout, the retest of this range as support, and then you find another opportunity here to go for the upside continuation and possibly expansion of a new weekly uptrend. Those are just a few of the trades on Microsoft that I'm eyeing myself. Moving into Netflix right now. Netflix up about 0.54%. And Netflix just basically not reacting to anything the rest of the market is doing, right? It's kind of on its own little journey right now, and it's a very beautiful journey indeed. Daily option is clear as day right now, looking for a daily higher low. Seems as though they found it. If you want to be sure if they found it or not, you got to be sure that they have the hourly trend change. As of right now, they do not, but as soon as they establish that new hourly trend, you can officially say the daily higher lows are set and you're looking possibly for the expansion towards new all-time highs. In the event they do not get there, reject and go lower, establishing the daily downtrend, losing this 12 EMA that they've held ever since earnings. You guys know daily consolidation means you are looking for weekly consolidation as well. And at this point, tons of space for the bulls. Anything above 745, looking for a weekly higher low for possible further trend continuation. I wouldn't be opposed to shopping for a little bit of Netflix on a pullback, but up here, in my opinion, the risk reward is just not worth it for me. I'm still a long-term investor in the company and I'm holding all of my long-term shares, but just adding more up here when the RSI is in the high 70s to 80s, maybe not the best value or risk reward profile. Moving on to NVIDIA right now. NVIDIA down 1.15%, but they were down a whole lot more this morning, right? Red day, but a green little candle. So what exactly happened to NVIDIA? Well, the rest of the market, right? All the semiconductor trades coming down because of those weak Dell and HP earnings as well. So NVIDIA being dragged down now for pretty much the 5th red day in a row. I mean, unless you count this one, then it's number 6, right? So 6 red days in a row for NVIDIA. Is it over? Has NVIDIA topped? Probably not. You guys, we did their earnings last week. Their earnings were absolutely fantastic. This is just the bottoming out of the semiconductor industry, guys. In my opinion, right? And these, you know how fast these rallies happen, right? Because you've seen them before, to where semiconductors can have a little bit of dip and consolidation. And then after consolidation, 3 months of consolidation, I wonder when we had a similar period in time as right here. Well, maybe last fall. You guys know when they break out hard and they kind of never look back, right? So now's the time that I'm building positions in some of my favorite companies, and NVIDIA definitely is one of those companies. So NVIDIA right now, 135.34 is the closing price. A little bit below us. If we come even lower, perfect. Come into me, guys. I'm waiting here. I'm waiting here with some juicy call option orders. So 130 down to 126 is going to be the next area of current support. Prior resistance should be acting as newfound support, and that would be a drop down from NVIDIA from the highs of about 15%. At most, if you take a look at the weekly chart, we could come down to our next support level down here, which is 120 to 115. That would be the extreme buy opportunity, guys, in my opinion. That would be 21 down to 25%. Funny enough, every time NVIDIA pulls back in a big way, you can see what are the percentages that they do? Roughly exactly that percentage range. Same thing back here, roughly 20-25%, right? So if they pull back there, has been a good buying opportunity over the course of the last year. So I will be going a little bit here, and if we come down here, I'll be going a lot more heavily. But as a whole, guys, not too bad. You can see, yes, we did break down from the rising wedge, and now we have the follow through into our support level as well. So even if we do continue on this daily downtrend, it is still just very healthy weekly consolidation, in my opinion. And even on the monthly, guys, just looking for a little bit of monthly higher low action, maybe into the early month of December. If we get our last wick down into here, that may be one of the last buying opportunities that we may have on NVIDIA before it starts gaining levels into 2025, because they gave us our guidance, guys. 2025 is going to be another blockbuster year for NVIDIA. So I'm not too nervous about them. The one caveat to all of these names is, of course, the bear market thesis, right? If you get month over month negative jobs data, January and February, and then we go into corporate earnings in the month of February and March, and companies reduce their guidance, say they're laying off employees, corporate profits are dwindling, stuff like that, well, then you really have to watch out, right? But as of right now, there's no sign of that. So when I analyze these companies, I will analyze them in the same way that I have been, which is a cautiously optimistic fashion, right? If you guys want to stay out of the market and stay fully in cash, that is completely up to you, right? To each their own, and I respect that. Moving into Tesla. Tesla down about 1.5% today. So unfortunately losing the daily uptrend momentum that they had, right? So daily uptrend was clear as day. They had the higher lows, went for the breakout, and then got challenged and now lost them. Not a daily downtrend yet. That would be lower high into lower low, but we did flush some pretty big levels right there. So we will see, can the bulls recapture in one clean sweep? Or are we possibly due for a little bit more downside? Well, one thing's for sure, if we do get a little bit more downside here, guys, where are we heading? Possibly towards the 310 down to 300 level. The level that was so challenging to break out of a few times, we are now going to be testing it as support. The 12 EMA should have time on the weekly to curl up into this region as well. So if we do drop down here, the way I'm going to be playing it is I will be looking to write short put options in the 280 down to 270 level. Seems like a very decent entry opportunity for me. So that is how I will be playing Tesla. And of course, if the bulls just go on an absolute rampage and disregard this daily loss of the uptrend and just V-shape and move higher, you guys know what the level to watch out for. Overhead resistance is stayed put right now at about 380 up to about 400 all-time high psychological level. So not looking too bad by the bulls. Tons of space on the weekly setup for the weekly higher lows. In the event that the daily downtrend continues rolling over, the weekly trend goes into consolidation, and we come into support, I will be sitting down here with my short put orders under the market, benefiting from some of that volatility. And now lastly, Palantir. Palantir up about 0.47%. Not a bad day, not a good day. Well, I mean, any green day is good, right? But, you know, kind of just flat for Palantir here over the course of the day today. Nothing has changed with this analysis, guys. The analysis is still the exact same as it always has been for Palantir. Let me just switch this real quick. We're going to use purple because I know all you guys love purple probably, right? So we're going to use purple. I probably should be using yellow. Let me just use yellow. I used to be using yellow, right? So let me just use yellow because you can't really see, so there you go. So this is the support level, guys. This is the daily higher low. So we know the context is a very nice daily uptrend. Any consolidation is looking for a higher low, anything above these guys, 58.85-ish, let's call it. Higher low, looking for possible further trend continuation. Psychological levels, guys, right? $70, $80, $90, $100, $1,000, right, for Palantir. So keep that in mind when doing Palantir analysis. In the event we roll this over and you get the daily downtrend, is it over for Palantir? Is that it? Well, probably not, guys. They have tons of space on the weekly, looking quite good for a weekly higher low for further trend continuation. And in the event that Palantir comes down here hard over the next few weeks, potentially for XYZ reason, right? Let's say they get investigated by the FTC and the DOJ, because apparently that's what those guys like doing right now. So let's say for XYZ headline reason that Palantir comes down over the next 2 weeks into the high to mid 50s, I will be looking to shop maybe for some short puts, $50 towards $45 under the market. You can probably get some decent premium down there. But as of right now, guys, very tough for me to position up here because I just don't believe that the risk reward is worth it right now. And that is coming from me. I have Palantir. My average cost, guys, is $11.70, something like that, right? So that's, take it from me, right? I am a Palantir shareholder. I'm not trying to talk bad about the company or anything like that, right? But I do think it's a little bit expensive right now, both fundamentally and also in terms of the weekly RSI. So take from that what you will, but Palantir, no red flags at all. The bulls are still looking very strong. So now let's enter some of the stocks that have moved really well today. Well, obviously BITX, obviously MSTR, that goes hand in hand. I keep saying, everybody asks me about MSTR as if it was its own asset, guys. This doesn't move unless Bitcoin moves. So whatever analysis you want me to do for MSTR, just refer to my Bitcoin analysis as well. If you think this is not the top of the cycle for Bitcoin, most likely it is not the top of MSTR either, and you can find some share appreciation. Just be careful with this one because we know that it moves with a 2-to-1, at least 2-to-1 beta towards the underlying asset, which is Bitcoin, meaning it has roughly 2.5-to-1 the percentage moves. If Bitcoin is down 5% in a day, usually MSTR is down 10, 12, 13%, right? So just keep that in mind. Go with the price action levels. For me, there's some very attractive premium to be had right now in the $300 to $200 range. So I am writing short puts under the market right now. A few other names like Coinbase, same concept for Coinbase, right? A lot of Coinbase's rally has been Bitcoin predicated, so take from that what you will. Some of the EV names are doing quite well as well. We don't cover this one a lot. Li Auto, only one of 3 profitable EV manufacturers in the world. Keep that in mind. Tesla, BYD, and Li Auto. The only 3 companies that can produce every single electric vehicle sold is made and sold at a profit. Profitable net margins. So Li Auto not looking too bad. Part of the China trade. Let's talk about the China trade, by the way. Baba. I'm very interested in Baba and Baidu in these lower levels. I will be starting to write some short put options. And if for whatever its reason Baba presents me an opportunity, 80 down to 75, I'm probably going to go leap call options, guys. But leap call options with a lot of time. We know China can stay out of favor for a while. So I probably will be going like June 2026 or maybe even January 2027 and probably going either at the money or slightly out of the money because the valuation on Alibaba right now is very, very, very good. A little bit more. Well, I'll be writing some short puts, but give me a little bit more and I'll be going for the leap calls a little bit down there. So that ties into that as well. Rivian having a big day too. Rivian not looking too bad. I still like this company for what it is. It is still, on an absolute basis, the company is not so cheap, but in relation to where it can get when times are good, it is fairly decent. There is a trade here. Obviously, the stop loss would go below 952, and you'd be targeting the top end of where we got before, roughly the $16, $17 range for a longer duration swing trade as a whole. Taking a look at SoFi right now, SoFi is just gone. Right now, is starting a position right now a good idea on SoFi, guys? Well, maybe if you have a long enough time horizon, like 5-10 years, but if you're looking for a swing trade, the risk reward profile, guys, is somewhat unfavorable. If you decide to do it and you get lucky and chase the market because the market is in everything melt up mode right now, well, perfect. You can say, see, Will, I told you so. It's going to keep moving higher, but it's just the style of trades that you're developing right now. I hope that it doesn't become a habit for you of buying things when they've blasted off from the all-time highs. You should be trying and identifying the companies when they're at the low points of their cycles and then practicing holding them as they kind of move through the upswings in their cycles right now. Resistance stays put, but we're almost through the resistance right now, and the next big level comes at $23. So congratulations to all SoFi holders, but myself personally, I'm waiting for a bit of an extended pullback. If we can find some extended pullbacks here, maybe something like a 1, 2-week just consolidation phase. I'm not even looking for this. Just give me some sideways consolidation price action, and I may be able to establish better levels to build some trades off of. But SoFi right now, no major red flags other than the fact that, well, I mean, the weekly RSI is sitting about at 86 and the daily RSI right now is sitting about an 82. So can it still rally? Yes, but developing the trade habit of chasing a trade with such overbought conditions, guys, it is not a good habit to build upon, right? You can do it. You may get lucky doing it as well, but it's the same thing that I told people about MSTR when they asked me the question about, is it a good idea to buy MSTR up here? You know what I mean? When the RSI is way overblown and stuff like that. And I was saying, yeah, you can do it and it might work, but you probably would rather wait for a pullback, right? So same logic kind of applies to there. So those are just a few names that were up a lot. Robinhood, exact same analysis. These are all in the same sector. They're all Bitcoin proxies, right? CLH, trying to find a local bottom right now. Not looking too bad, guys, but don't forget, like, this company's not changing the world, right? It's only an energy drink company at the end of the day. Yeah, they have a distribution deal with Pepsi. Yeah, the valuation right now is fairly cheap at around $30. Not too bad at all. Yeah, the MACD is curling. Yes, fundamentals should be improving over the course of 2025 into 2026. Yes, I know all of these things, but if you are playing it, just be careful. The stock's been out of favor right now, so I like to play it with short puts under the market, but could be a decent opportunity to bid right now if you have a long enough time horizon, right? Even though the energy drink sector has not been doing amazingly this year, Monster Beverage has recovered a lot better than CLH has, right? Monster Beverage well off their lows and now about the midpoint between there and their all-time highs. CLH just not getting shown any love whatsoever. We'll see if they get picked up as part of the small cap trade. But yeah, you know, not a bad proposition to be building a little position down here, but you may have to be a little bit more patient than you're anticipating. Talking about Enphase right now, Enphase not looking too bad at all. As you may remember, we purchased some call options when the stock was down here, and we were playing short puts aggressively as well. Now, we are still just looking for a weekly lower high, and then eventually a possible weekly trend change, but these things can take some time. One thing's for sure, decent area to start bidding if you have a long enough time horizon into next year, into 2026 as well. Decent buying opportunity for a longer term swing on the company as a whole. The fundamentals of the business down here are pretty good, and any competition from Tesla's Powerwall should be years down the future. There's enough total addressable market for both of the companies right now to expand into that market, the overall market, before kind of one starts taking away from the other. That's my take on the company. Decent valuation, could be a decent idea for a swing trade. I am already in, and I will continue to play the pullbacks on this one. If you get a big pullback next week, I'll be writing some short puts once again around the low 60 to high 50 areas, depending how good I can get. Elf Beauty has been on my swing trade list for a few weeks in a row right now, bottoming out nicely, finding some support and building a new shelf of support over here around the $120 range. This is the bulls trying to set up, guys, for the inevitable weekly trend change. Fundamentals of the business were good, earnings were fantastic. MACD on the weekly crossing could be an indication that the bulls are wanting to go for more, and the profit target for me would be around the 150, 160 range. So if that's the case, I will continue to play short puts as I've been doing in the most recent few weeks. And if we get a big pullback day on Elf Beauty down below 120, down to like 115 again, finding a base of support with prior resistance, well, I may even be looking to get cheeky with it and go for some shorter duration call options, 3-4 months worth of time on those. That's pretty much it, right? In terms of those names, I don't want to go through all of them, but just covering a lot of them, right? SMCI as well. You guys know I've been positioning in those as well. Fairly, well, not aggressively, no call options for me yet, but I have been playing the wheel strategy on them a little bit more aggressively. We went over their earnings together. We also went over NVIDIA earnings together, and the earnings of this company were very good. We cannot deny that SMCI, even though they have regulatory troubles and accounting issues, of course, they do still have a very good product, and they have cornered 70-80% of the liquid cooling market share, which is what Blackwell will be using as well. This has all been here since their earnings, guys. I haven't touched a single thing, right? And they did say that there's no significant reduction in demand due to the regulatory concerns and filing delays. We know they will be a key speaker at the keynote event for NVIDIA in the month of January. So I do still think that their partnership with NVIDIA is fairly resilient. The valuation down here is absolutely destroyed. We did it at 24, but even at 35, it's still going to be absolutely destroyed here, guys. So Not a bad opportunity to just play the price action. Consolidations open up some strikes down here for some short puts. And if we get a sign, we are just going to try and ride the shares higher. Of course, because there is some risk in this company, do not do it with more than you are willing to lose, of course. Those are just a few of the ones, the high flyers to the upside. To the downside, we had Symbiotic reviewing their earnings to the downside, of course. Big move down, 35% down. I like what this company does, but I do not like the uncertainty around the company. They dropped a lot back here for the same reason and because the CEO was accused of pump and dumping the stock, essentially, talking up a whole show about the stock, and then he is one of the biggest sellers. And we're not talking about like Palantir executives sell on these predefined stock sale plans, right? No. This is the CEO physically clicking the sell button aggressively after saying that his company is going to be worth several more billions of dollars in the future, right? CEO being accused of pump and dumps. These got hit with the exact same thing as SMCI, delay of their 10K filing report. You can see how much damage was done. I'm not really interested in playing this company, to be honest with you. I like their product, but once again, there's a lot of uncertainty around this one. Maybe if they give me some really good deals below $20 again, I'm interested. But even at these lower levels, I mean, you know, if you want to take the risk, be my guest, but I'm not doing this one personally. Autodesk had great earnings. They're up a lot. But then again, guys, we're not really near a relevant area of support at all, right? I guess you can argue that we can pull these guys all the way back from 2021 into these guys right here around the 2024 of March, right? So if I'm looking to write some short puts, probably has to be at least 270 down to 260 for me to be interested in Autodesk. Once again, looking for the good old breakout, possible retest of the range, and maybe run a little bit further down the line. CrowdStrike, we covered them yesterday, so I'll not go over them again. We covered them yesterday. Oracle as well. I mean, Oracle, what do you want to do with this stock, guys? I mean, it's all-time highs, right? We're not really pulling back anywhere. I guess you can argue that this is the next area of support, but very, very, very extended on the RSI as well. The valuation, surprisingly, at 152 when we covered them, was not that bad. Even up here, it must not be tremendously bad. But once again, guys, the risk-reward profile when a stock looks like this is not the best. I want to find it when it has levels like this, right? Breakout retest, and it's fine. I don't need to play Oracle up here. For every stock that is not at a level right now, I can find you a bunch of ones that are actually completing a breakout retest pattern right now, such as some of the big tech names that we went over in today's video, right? So Oracle is the same, CRM is exactly the same as well, even though the company is doing well right now. Looking for the retest, right? We need to wait for the retest, the back test of prior all-time highs, the back test of prior moving averages. So if we come back down here, that is your retest location, to say the least, right? Looking for the retest of roughly the 310 down to maybe 290 zone. If we can get a nice little retest down there, cool off these weekly timeframes, catch up to the moving averages, breakout, retest, and possibly due for another leg. You see it on all the timeframes, right? The monthly's looking good, the weekly's looking good as well. And in terms of your daily chart, guys, well, the daily bulls, if you lose this, you lose a daily uptrend and you head right into the levels that we want to have maybe an opportunity to go shopping for those stocks. So that's pretty much everything, guys. We've covered a lot of different stocks. I'll try to do this more often to where I run down a lot of them. I mean, I give you a lot of these ideas on the top 5 options plays, right? New Holdings was a top 5 options play down here. Palo Alto Networks we didn't talk about. AVGO as well. I was talking about this one being interested. If we do retest the 149 to roughly 130 level for some short puts down there. TSMC, same thing, right? TSMC coming into a nice level of support down there. Talking about roughly the whole, 175 down to 160, this whole 200-day moving average. Big support after we kind of, I don't know why my box erased, but I had a box right here, right? And we've kind of flushed through that zone, initial zone right now, kind of like NVIDIA, right? So now we're coming into zone number 2, arguably the more solid zone right now for the company. What is it, guys? It's literally just a monthly trend continuation trade, right? Pull back into here in December, just trend continuation possibly for appreciation into 2025. 2025 is going to be really good for them. So that's pretty much everything I had for you guys today. We went over a bunch of stocks. Obviously, I can't cover my entire list of 150 stocks here, but hopefully, I covered a few of them. For all the other ones, we've covered them a bunch of times throughout the week. We talked about Coca-Cola swing trades, Square, everything. When I do my portfolio, you guys see a bunch of other swing trades as well. So I'll try to bring you guys as many of these as possible. But that's it for today's video, guys. Hopefully you enjoyed it. If you did, consider dropping a like on the channel. Would appreciate it for the growth of the YouTube algorithm. Of course, we are almost at 4,000 subscribers as well, guys. Brand new milestone for me. Very happy and thank each and every one of you for getting me there. So if you haven't subscribed to the channel yet, consider giving me a little bit of a boost towards my milestone. Would really appreciate it, guys. And lastly, if you have any questions, as usual, feel free to leave them down below in the comments. I'll be answering all of your questions tonight. So feel free, whatever you want, guys. You want a second opinion on a stock, on an options play, anything, I'll do my best to answer your question without it being financial advice. And in the event you guys want access to all of the real-time trades, all the trades that we've given in the Discord so far throughout the weeks that we've been live pretty much. If you want access to all of these trades, the wheel trades, the call option trades, the leap call option trades, the debit spread trades, the credit spread trades, all of them. I do a lot more than just that, right? Long-term investment discussion trades as well. Private morning live streams Monday to Friday for about an hour and a half, 2 hours. And also in chat, ask me all of your stock and option specific questions all throughout the day and have me answer in real time. I answer very, very, very quickly. Everybody in here will be able to tell you that. So if you want access to the Discord, guys, the link is always down below in the description. So feel free. And if you do, well, I guess I'll see you in there. And if not, I'll see you back on the channel, guys. So take care. That's it for me. I will see you tomorrow. Going to do a topic specific video, but obviously no market recap. And then of course, the next market recap on the Friday session. Take care. Happy Thanksgiving. Spend some good time with your family. Love you guys and peace.